Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, December 14th, 2022. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. It is Fed Day. We have our FOMC statement today and the rate decision, followed by the press conference 30 minutes later. That's going to give us another FOMC key level today. So here, looking at the daily time frame of the ES, we're going to get ourselves another FOMC key level. The last time we got one was November 2nd. That was 38.5275. Price taking that area bid and rallying as high as nearly 4,200 yesterday. 41.80 was the high. Big time rally. One of the things we mentioned yesterday pre-market was that this high was going to be important. If price started to fall back below that high, there could be a pretty big rejection that develops that day, which pushes us back into this range. So we're inside this range now. We have a very narrow range heading into the RTH Open, just 32% of average range, 28 points of range today. That right there, again, could continue to be the case throughout much of the day. We could kind of see some back and forth price action, range bound action ahead of the 1 o'clock FOMC statement and rate decision. 30 minutes after that, 1:30 p.m. Central, we get our press conference. So the final 2 hours of the day could be quite volatile with a bit of range added to it as well. We'll see how much range we get. It could be another day that could be as big as what we saw in the previous session. So again, we'll see which way we go here. 4,100, the big level to the upside. Failure to get through that level, and you start to rotate back toward 3,900 below. All right, taking a look here at the NQ. Right now, the NQ, again, 30% of average range, 94.5 points right now. Very, very tiny range. Yesterday, a big push through 12,250, rejected back down, and is now, again, inside that narrow range that has developed over the last 3 or 4 weeks. This range right here is also super tiny. Again, the 30% of ADR day heading into the RTH Open, very narrow at the top end of this narrow range. If there's a failure again to see expansion to the upside, we could easily fall back within the range without really committing to direction right now. So overall, this market again has been resilient. The NQ has been lagging the ES and the YM, but it is holding at the highest point here that we've seen in a while. The FOMC key level from September is the key level right here. That's about the 12,059 level. We're trading around that. The lower June level here as well. So again, we get another FOMC key level here that could provide some volatility late in the day and into the rest of the week. Looking at crude oil. Right now, crude oil up 1.59%. A squeeze back above the previous month's low, back above the previous year's close now, and here at the moment we are pushing back above the 76 quarter level. That 76.25 level is the key range low. It's the previous quarter's low, and right now we are just above that level. One of the things I mentioned here over the last couple of days is we could see a bounce materialize, but once that bounce occurs, are we going to see another round of selling pressure, a sell the rip, and a continuation downward? That's going to be the thing to watch out for. So in pushing through 76.25, maybe it gets as high as 78, in that zone, what happens then? Does it begin to fail? Does it start to show some sort of rejection like this? If it fails to hold 76.25 moving forward here, that could be an indication that we drop back toward new lows. 67.55 could be the next downside target. Now, if price is able to find acceptance above the 76.25, look for a rotation back toward 83.50. Taking a look here at gold futures. Right now, gold trading in a narrow range ahead of the FOMC statement later on and the rate decision. Super narrow range. This one is 30% of average range as well, sitting right inside the 1820 to 1830 zone of resistance. That area has been resistance for throughout the second half of the year. Basically dropped down away from that level late in June. A big test in August also dropped this thing down, and here we are in December testing it. Again, if we're going to push through the 1830 level, it opens up another 50 handles of upside into 1880. A failure here, and we're dropping back towards 1740. and trading still within that range. So right now, kind of at the edge. We'll see which way we go. Taking a look lastly at the YM. The YM here with a big tail event in the prior session. Big reversal from the highs. That pushed us back down below the 34,500 level. We're now inside that range that has developed over the last several weeks. Very narrow range heading into the RTH Open today. This is also about 30% of ADR. Again, we're kind of at a big time level here in the charts in the higher time frame. We'll see how the market responds to the Fed later on today, but if you look at these highs right here, those have been about as high as we go this year before the market has rotated back down. So it's been an area that has been sold in January, in February, again in April, and now here we are testing that zone and moving away from it in December. So to move away from that upper resistance could put us back down into the lower band here at around 32K. So again, even if we see a significant rejection here, we could be pushing back toward that lower boundary up ahead. So we're inside this range through 35.4. That opens up new highs on the year. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.